Hi guys, and welcome to another dividend investing video. This is Joshua Webb, and I am recording this video in my favorite city in the world, in Prague. I've been here with my family, enjoying all the amazing sights and foods and Christmas markets, and been an amazing experience. But I did find some time to get in and record another video here. So the first part of the video that I wanted to talk about is the type of stock that I'm not investing in right now. And this can be a bit controversial, but that company is Microsoft. So you're looking at Fast Graphs right now, which is again a terrific program for looking at the valuation to compare companies and their valuations over time. So you can see with Microsoft now, they have amazing earnings growth happening every year, 6%, then 19%, 17%, this year 22%. Experts are still forecasting that they're going to be gaining another 12 to 14% the next few years. So obviously Microsoft is a terrific company. Anybody would love to have Microsoft in their portfolio. But the problem that I have with them is their valuation right now. So you can see historically here that Microsoft trades at about a 20%, a 20 PE ratio. And right now they are trading up at a 31 PE ratio. So they're significantly overvalued compared to their historical valuation. Even if we shrink this down a little bit, where they've had this amazing growth here recently, you're still looking at the last 10 years or so at about a 19 PE ratio, and they're up here at 31. So terrific company. I'm not interested in buying them at this time. Where this gets a little tricky is if you're looking at a different timeline than what I'm looking at. So I'm willing to trade in and out of my companies, and I like to always have that margin of safety for a company that is fairly or undervalued, depending on the quality of the company. And as wonderful a company as Microsoft is, I'm not crazy about their valuation right here. I did have an interesting situation recently where my wife and I were starting to make plans of buying a home down the road, and we had some money to invest. And so I was trying to find some companies to get started for that. And we're looking at about a 3 to 5 year timeline. And of course, what a lot of you will be saying right now is that we're at an all-time high right now, and the market is likely to pull back at some point. And that's absolutely possible. Some would say it's likely. But I actually went ahead and invested the money that we had planned for the next few years. My plan was to buy the good companies, safe companies that I thought were undervalued or fairly valued right now. And down the road, I will add whenever we see any big pullbacks in the market, or if any of the quality stocks out there have any pullbacks individually. So let's go look at the companies that I did decide to invest in. Okay, so now we're in the list with the stocks that I chose to invest in, starting in our investment account for our home. So what we have here, we have 9 different companies that I've bought. I started out with the first 7. So again, I think these are all pretty safe companies. So the first ones that I started out were Simon Property, which is the first one here. They're, I think, a super swan, very, very safe company. Sleep well at night. But they're a little bit beat down by the Amazon effect right now. I think they're going to be fine. They have the generally A-level malls and not the lower malls, the ones that are getting run out by by Amazon right now. Then jumping down a couple, the next stock that I bought initially was Caterpillar. Again, this is a company I feel very, very safe with, very good industrial company. We all know Caterpillar. You even see them now selling a lot of their clothing and merchandise and all that. My other job is a school teacher, and I see a lot of the students walking around with Caterpillar merchandise, and so a great brand name that is, again, a little bit down because of the China trade talks, but I think in the long run they're going to be just fine. So EPD, this is one of the pipeline companies, just a terrific company, very safe, great acquisitions, really seem to know what they're doing. So EPD was the next stock. Then ABBV, I wouldn't consider them one of the sleep well at night stocks, but I think they're still rather undervalued. I have them in my other account, and I think I'm up about 15% right now with them. So far, just in the last week or so, they're up 3% here. But they seem to be seriously undervalued while they're making the transition with their new drugs away from Humira. Okay, next on the list is 3M. Again, they're already up a little over 5%. So 3M, again, a terrific company. I think the saying is with them that we end up using at least 5 products from 3M every day without even realizing it. So a terrific industrial company. MSM is another one that I bought here. This is MSC Industrials, is the actual company. And they made some really big news here. This was exciting for me because they announced that they will be paying a $5 special dividend in February. So these 14 shares that we bought here, they will pay out another $5 in addition to their normal dividend. So this will end up being a massive payout here. If you look at the dividends, at least for next year, they'll end up paying out about 10%, which is fantastic for a very safe quality company. And then the last one I bought was CSCO. They're up a little over 6%. Very good technology company. And I think they have a bright future. So there are 3 other stocks that I've bought since the initial purchase. And actually one of them is not in here. That's ticker AVGO, which is Broadcom. I bought that in my other account. Did not buy it in the home account, but they had a 5% pullback on some silly news that I don't actually think will affect anything. So I bought them for our other account. Then I also bought Home Depot here. They dropped 5% on a bad earnings report, which I didn't actually think was very bad. And you can see they've already recovered almost all of that 5%. They're up to almost 4% now from when I bought it. Okay, so we'll jump over to the dividend list to see what the best buys are for this week. Okay, so now we're looking at my master spreadsheet that I keep to pay attention with the Morningstar values here. This is the discount from the current stock price to the Morningstar stock price, what they consider the true value of the company. I don't actually take this number again as gospel. I think there's a lot of inefficiencies, but it's a good starting point. Whenever I've done my research here, I'll go in and look at fast graphs to find out if I agree with the valuations that they're showing. So a lot of the same companies that have been up at the top of this list for a while now. We have ticker ET, Energy Transfer, then Albemarle, MPLX, Marathon, British Petroleum, a lot of oil companies again. So these are a lot of the same names that have been up there at the top of the list for a while. I bolded the companies that I've bought recently. So So you can see here Simon Property Group that I mentioned in the last part that I purchased. Let's see here, Brookfield Property. This is another company that I own that I like quite a bit. I think they're seriously undervalued now and are worth a look. GILD, actually I didn't mention them in the last part. GILD was the last purchase that I made. I think they're a bit undervalued right now. They pay a nice 3.78% dividend, so almost 4% dividend. And a quality healthcare stock, very safe dividend, 83 score on the dividend safety. EPD that I just purchased, and again, these are Simon Property, EPD. These are 11 of 11 on the Dividend Sensei scale. These are super swan, sleep well at night companies, very safe. EPD especially, I mean, you can see their dividend safety is about as safe as it gets. They say that's 99% chance that even in a recession that they would be able to keep paying their dividends. So absolutely terrific. Lazard's another company that I've owned. They're up almost 20% from where I purchased, but I still think they have another 20% to get into relatively fair value. CVS has run up about 40% for me, but I think they could run up another 20% before they've reached their fair value. Exxon's one that I'm definitely starting to keep an eye on. I don't have them yet, but if I had some money to spend soon, I think I'd probably go ahead and open up a position. I have a lot of energy, so I'm a little hesitant, but they've been increasing their dividend for a very, very long time. This is a safe 5% dividend with a world-class company. So it's the kind of company that I tend to like quite a bit. Some of the other names I'm seeing in here, Pfizer is one that I'm definitely getting interested in around this price. You can see on David Van Knapp's scale, this is the highest score that you can get for, he takes into account the Morningstar mode, so they have a very wide mode. They have a safe dividend, a little lower than whenever he made this score. I think they were actually up above 80 in the highest group, but they've come down a little bit, but this is still generally a very safe dividend, good company. So they're one I would be keeping an eye on right here. And then we get down a little bit more here. Let me scroll this down. So Caterpillar and ABBV, these were two more of my purchases. So both of them have run up quite a ways from where I initially purchased them. But I think they still have some room to run. So they're still looking pretty good. So it's getting a little trickier to find some good buys out there, but there's still some very good companies. Personally, I'm looking forward to a pullback. Whenever we get the pullback, everything's on sale, and that's a wonderful thing for us dividend investors. So anyways, I hope you enjoyed the video. I'm going to go ahead and wrap this up. This is a little longer than my videos normally are, but hope you all have a happy holidays and a wonderful investing time, and I will see you in the next video.